talk banking. The final Tier 1 bank, First Holdco, has released its full year 2025 earnings. Also, it's Q1 2026, but we're focusing on audited earnings there. You can see gross earnings up 7%, interest income 24%, but there's that big impairment of 826 billion, up by 93%. Also, net loss from financial instruments there, flowing through to the profit and loss statement, 55 billion. Operating profit down 71%. Profit after tax also dropping 77% as well. All right, Business Analyst Chika Mbonu, who we always give this tough stuff to discuss, is here with us on a Friday. He talked Access Holdings, he talked UBA, he's talked them all. Banking is his bread and butter. Chika, you're welcome. Good morning, sir.
Good morning. Thank God it's Friday.
Yes, indeed.
Yes. So we're looking at First Bank today.
Yes.
I think the last of the figures.
Yes, indeed.
Yes. 2025 audited accounts. Let's start from the profitability.
Yep.
The gross earnings increased from about 3.321 trillion to 3.44 trillion.
Yes.
Now, usually, when you look at the profitability of a bank like this institution, sometimes when they give you the report, your eye don't go to the top.
Yeah.
You run quickly to the bottom.
Exactly. Bottom line.
Bottom line. Bottom line. So, I mean, we look at the profit before tax for this period for 2025 for First Bank, and it came, as you say, it fell by about 72%.
Yep.
And after tax, about almost close to about 80%.
Yes. Yeah.
Yeah, I know. So, these are the massive, falls between 2024 and 2025 financial years. Now, but I mean, if you look at this in the context of what the things we're looking at, you know that 2024 was an unusual year.
That's correct.
For most of the banks that we've analyzed. And 2025 happened to be the year that mandatory central bank injunctions took place.
Right.
Especially they had to do forbearances, COVID forbearances and loans, that banks had to use 2025 to clean up their books. And then, so you find that impacted banks variously. Now, so what I just do is to walk through this financial of 2025 for First Bank. And the first thing is the revenue still grew very strongly. The gross earnings grew strongly, even though we talked about the fact that the bottom line fell massively. So it tells you there for the core banking activities or the bank are still generating income, and the interest income remained very strong.
That's right.
So the major activity of the bank, which has to do with financial intermediation, is still very, 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 very strong.
Core earnings.
Core earnings.
Yeah.
Financial banking, FS-related income still supported the revenues. So that's major, for the bank. But as I said earlier, profit collapsed sharply from about 677 billion to 139 billion, massive, but decline about 80%. That's, but the key distinction here, as I want to say, put it out through to everybody's listening, it's not a revenue weakness. It's not an issue of revenue weakness, as already said.
Yeah.
The issue has to do with the huge impairment provisions,
right,
charges, credit losses, FS-related, stress, prudential adjustments I talked about, the mandatory one CBN I talked about, and then very heavy provisioning that the bank did. So loan impairment charges actually exploded. It moved from about 371 billion, almost 800 billion, 787 billion. Yep. It tells you that asset quality was under pressure. But something tells me that Hotel Dollar, Mr. Femi Dollar happens to be the group chairman of the bank, and I'm aware that that he seemed to have sold a lot of his assets in some other Geregu and not so many to focus on First Bank, and I have a feeling that the board has made a decision that they will use 2025 to clean up their books. Yeah. So, and then that's basically what so FX devaluation was a major issue. Remember we talked about that 2024 was a good year for the banks when rates moved to 1.6, and then now rates have moved down. So there are a lot of reversals on that. And oil and gas clients majorly, seem to be a cost for the banking industry.
You talked about it last time you were on news with us.
Yeah. But as I said, interest income grew significantly. loan advances income rose from 1.36 to 1.85. That's substantial. It tells you that core business is also working. But for the shareholders, it's not good news.
No dividend.
Yeah, the earning per share collapse is very important to shareholders. It fell from almost 1.859 kobo to 317 kobo. The explanations to do, shareholder returns weakened materially, that. And profit retention and capital preservation, therefore, became priority for the shareholders. So I believe that, like I said before, that the shareholders will just hold it and say, let's suffer in the short term.
Right. For long term.
A sturdy bank, a strong bank, everything cleaner, so that we can have that. Balance sheet was good. Total asset grew by about 3%.
Yep.
Total liability that. But you see, loan advances about 2.3%. But the major thing here is deposit from customers grew by about 10%.
That's healthy. That's
healthy. The major.
Yeah.
That's actually one of the strongest positive of this year, 2025 result.
Yeah.
The fact that grew. It tells you the customers still trusted the franchise, and then liquidity franchise remained resilient, and the retail and commercial banking franchise also, network delivered strong fund inflows. That's that. You remember that the life of the flesh is in the blood. The life of the bank is in liquidity.
Yes, indeed.
Any bank that does not have liquidity dies. Yeah. So if any bank that will start seeing the deposit portfolio shrinking, that means that the bank is into problems. So even though, as you said, that there's no revenue challenge, loan growth was moderate, about 2.3%. Again, with all this write-off, you know how it is there.
Right, they charge.
You must be cautious.
Right,
you must be cautious.
Right,
you must be defensive. You must selective in risk creation. But investment securities was up.
Yeah.
But almost about 7 trillion. I have a feeling that it's a waiting situation. Let's just wait. Clean up our books and then wait. That. So ratios, okay. Capital adequacy. Declined.
Yeah.
You understand?
Yeah, because of the
provisions. The impact. And Taiwan capital also declined about almost 13% decline. So that's that also. So for me, Rotus, I will say summary, some takeaways. Revenue is still growing for me. Deposit base is still very, very strong for First Bank. Franchise remains systemically very important. Asset base is still expanding. International funding access, because borrowings actually increase.
Yeah.
Still believe in the bank. The African of this world, and core banking franchise is still very alive. But the negatives include the fact that there was massive profit collapse, which led to the fact that there are no dividend for shareholders. Heavy loan impairment charges, which is massive. Capital adequacy weakened. They have to look at that and see whether they have to shut that up again. Bottom line is this, for me, summary, balance sheet survival and clean up year was 2025 for them.
So going forward,
rather than a shareholder returns here, so the core franchise appears live and powerful, and customers stayed. So going forward, I believe that the bank will then right footing now to move things off. They have been able to absorb extremely heavy risk costs and provisioning pressure in 2025. Hopefully clean up their books, and that provides the right pedestal for them to shoot in 2026.
Okay,
we'll forward.
We'll see how it goes. Arise Business Analyst Chika Mbonu, thank you so much for joining us to talk First Holdco's 2025 earnings. I appreciate your time as always, Chika.